you think about tax reform. Tax reform has definitely been a boost near term. We think the second quarter GDP number is going to be very good, given even PMI yesterday, given some data we'll see later this week. But more importantly, though, 2019, 2020, tax reform will start to wear off. Interest rates will start to rise even more. We do think this will pressure economic data, and we do think that some of the numbers for 2019 and 20 are a little bit aggressive. Also, you look at the rising dollar still. I know today the dollar is weakened a little bit, but the rising dollar is definitely going to impact our exporters. It's going to definitely impact some other issues. Plus, and I hate to bring the T word, but trade. Obviously, trade.
Gene, you look at what the U.S. economy has managed to do over the years, and I know interest rates are going up, but they're going up to levels that are much lower than periods in the past where we were able to generate much higher. Much higher economic growth than 2%. We averaged 2.8% for years and years and years, and 40% higher than Europe for 40 years. So there must be something that's changed fundamentally in your view. And I guess, what are you talking about? The population growth and productivity? Is that the same old mantra we hear again and again from people that don't think we can grow faster?
Definitely, but I think also you think about the labor market has also tightened. We've seen unemployment rate at 3.8%, lowest since 1960. But key point, we're not screaming that a recession is coming near term. What we're saying more importantly is that this business cycle, yes, it's going to linger a lot longer than normal.
Yeah.
You've got rates rising, and you also have earnings that should grow.
That will be a fundamental disappointment from what we've been sold on tax reform and what it can generate. Then you're saying that Mnuchin and everybody that is talking about what tax reform is going to do, they're going to be totally wrong, because they're talking about 3% or above. We're just stuck back in the 2% that we had when there was all the overregulation and redistribution. Anyway, Scott, is that where you are too? Is that all make sense to you?
Yeah, I think so. On a short-term basis, you're obviously going to get some support from the tax cuts this year and in 2019 as well. But this is really a demographic issue. When you look at GDP growth, there's only one recipe for growth. It's the amount of labor you input, times the productivity of that labor, the output per worker. If labor force growth is going to be a lot less than we've had in previous decades, when we had the baby boom generation coming in, female labor force participation increasing, those trends are way behind us. So instead of the labor force growing, 2.5% or so, it's probably going to be growing about 0.5% per year. And if you look at the BLS projections, about 40% of that was projected a couple of years ago to be immigration, and now we're cutting immigration in half. So the labor force input is really going to be ground. So unless you get some sort of magical, gigantic boost, unprecedented in productivity growth, you're really not going to get anything close to 3% GDP growth. 1.5% to 2% is the bogey, and that's based on the demographic projections and simple logic.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.